Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an amazing trading day yesterday, as we're going to do what we do each and every day, identifying potential breakouts and reversals from an educational perspective. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so that you get the alerts and the updates as they happen. Let's go ahead and dive right in. So this morning, the S&P were up about 1/4 point. We had one of those ones where you just get nicked by a tick. I mean, just missed our entry on this position in the overnight. I think it's still a valid entry. I just think that we've got to switch it to a confirmation entry now since we came so close to getting filled. But beyond that, I don't have any supply levels in place because there's no reason to sell in this marketplace. There's no reason for me to jump out front and look to sell in this position. So that's my level on the S&P. It's off of this big, rather quick move up, this speed candle here, and we anticipate speed candles to get retraced. So I'll leave the level in place. If we base in front of it, it will actually be useless. So remember the rule on basing in front of the level. That is the kiss of death on a zone. Next, the NQ. So the NQ level did work out for a nice little move as we traded all the way to the bottom of the zone that we identified. We got about a 3-to-1 move away from that zone, which actually turned out to be a pretty nice little trade. We came back into it a second time and then moved away. So now I'm going to take the NQ level off. So if you grab the NQ level, congrats. That was a good little setup. I actually think that the NQ is setting up for a better potential for a short today. So if you're interested in shorting, you could go candle to candle on the NQ off of this little rally up, especially with this candlestick. This is the kind of candlestick that we look for when we're identifying candle to candle opportunities. Of all of our markets, the one that I looked at yesterday and said, hey, if you're going to look to short, the Russell's probably the one. You could actually even have a breakdown in the Russell as an opportunity heading into today. Remembering, though, that these are all lower probability because our big picture is still going up. Now, next would be crude oil. So crude oil, we had a level down here for a potential demand zone. But what did we do in front of this zone? Everybody knows the kiss of death. We based in front of the level, which is actually a setup for a breakdown. And the breakdown did occur. So this trade did not meet the qualifications for entry, even though we had the zone identified. And now actually we're setting up for potentially another leg down. So let's see if we get another leg down off of this crude oil move today, as we could see price fall, and I think down to this 55.50 is a pretty realistic expectation. Now, I was thinking on the bigger picture that there's a chance we could see crude oil make it all the way up to 60. We just didn't get through that resistance here up above. That's where we needed to get to. Gold, man, gold just continues to fall. We had a little bit of basing before the level yesterday in gold, giving us a breakdown. It came right into our zone and then popped right through it. So this is actually the second time in 2 days, because this is the same thing we had the prior day, where we had a nice move down on the breakdown for a profitable trade and then a stop out on the reversal. And that tells me that I need to just not look for any demand levels at this point. I need to only take these supply areas as price rallies into these supply zones because the demand levels just keep getting blown through. So looking at gold, I'm going to wrap my lines around the pivot up here because it's a better time of day than this little base drop below the pivot. If you're so inclined, you could take this area as a confirmation, but our 4-hour is clearly telling us we should be sellers at this point. I got stopped out of demand levels too often for me to continue to look for them, but the good thing is that the breakout trades were effective enough that it still worked out okay. In our bond markets, so in the bonds, once again, kiss of death there, right? Basing before the level. If we had 4 candlesticks of price going nowhere here, meaning that I had less than a 1-to-1 reward to risk ratio. And so our supply level still in play. Now, our second demand level that we had, and this was actually the better demand level, price came into this zone, and we did get a very nice move away off of this level. This one moved away about 3 to 1. So now I'm going to take this one and remove it since we traded more than halfway into the zone. So our bonds, once again, we got a decent little pop, but our 4-hour is definitely trending down, right? And no big surprise there that the bonds and gold in a 4-hour market are trending down because the equities are hammering up. So this would be the origin of that move down right here, and this is right at the European market open. So that would be our next supply level. In the Aussie, we are, looking at this a while ago. We had talked about a daily demand area here that we may be approaching on this rally back up. This is definitely moving back up. I'm not a huge fan of the momentum coming back into it. The way that we're coming back is not the greatest. If I just draw a rising trend line, if I connect all those lower wicks, we're not quite there yet. If I connect just the bottom of the bodies, then we are. And so we are moving up on here, but I'm not a huge fan of the way that we're reapproaching it. Right? It's not typically a strong reversal type, and so there are a couple of areas down here where we may see a potential to get long. I think your better opportunities right now, based on most recent price action on the hourly chart especially, is to get short on some sort of a rally for an intraday or smaller time price action. Euro, same thing on this one as well. The euro price, we've got this little level popping down here, coming close to a demand area. The euro has really fallen off hard. We looked at this one yesterday and talked about, candle to candle, if it was something you wanted to get into. Leave me a comment below if any of you took the candle to candle short on the euro, because that one wound up working nicely for a couple of points, and then there was the little stop out right up in here. So I think that our next decent opportunity in the euro would be a rally up to these regions, but if you notice, we keep drawing rally areas and price doesn't come back to it. So you're better off on the breakdown. We had a nice breakdown here a little bit ago, but that's, breakdowns or candle to candle trades when you don't rally back up to those supply zones. Canadian dollar, much the same way, although the Canadian dollar, we didn't come quite to the level yesterday, and I don't have a clean supply level in here to lean on. If you want to take a breakdown, I would need some more basing just right down in here to be worthy of a breakdown from this point. Great British Pound, Japanese Yen. Yesterday we talked about the pound, how it had been chopping sideways, and essentially, Brexit was canceled due to lack of interest, is what it kind of felt like. And with Brexit being canceled due to that lack of interest, we've really just continued to chop sideways, although it's in a downward trend overall. On the bigger picture, we're scaling back, which is no big surprise. That's kind of what we had anticipated. It's not technically a double top because I've got lower highs here, but we definitely are putting in on a daily chart. I wouldn't be surprised to see a little bit of a bounce, but I wouldn't be surprised also to see a little bit of a bounce up to here and then us to fall off again. So from a daily perspective, that is something to consider. Japanese yen, we got a breakdown yesterday from our level that we were identifying in the live trade room. So those of you that were in the live trade room, let me know if you grabbed that one. You got a nice little 3-to-1 move. Before then it retraced back, and now we're still coming down from that area. Now this became then, if you didn't get the breakout, it became a great retest opportunity, and it's moved down from there. I think the next decent retest opportunity would be up in here, if price gives us a quick pop back up into the level. So heading into the weekend on Fridays, we have seen that there's been a little bit of a consistent to sell off over the heading into the weekend. I don't know that we'll get that this week, although it wouldn't surprise me to see a profit-taking sell-off towards the end of the market week. Overall, been a pretty good week. We had one day that struggled, and the rest of the week was a pretty good overall solid trading week. So leave me in the comments below. I'd love to hear how your week went. This is one of those ones where the market's at an all-time high. It's actually harder to trade in my mind the market at an all-time high than when it's it's got more opportunities, because you find yourself waiting for price to come down to demand, and then you're chasing if it doesn't. And the same thing is when when gold and bonds are falling and you're getting all those supply levels above you that you can't get in. Do you chase, right? The overwhelming opportunities that are out there in a more volatile market just don't show up as much in a straight up directional. But that's why you got to trade options and bigger picture time frames. If you don't trade options, I would highly encourage you to learn more about options. We've got a full suite of options education at tradersarmy.com. Feel free to go and take a look at it and learn more about them. But till tomorrow, everybody, actually until Sunday night live trade room. I will see you all soon. Have a great day. Later.